Ladies and gentlemen, welcome back to the channel. As we head into Tesla earnings this upcoming Tuesday, I think it's critically important that you know this information before then, and preferably even before Monday morning. Here in this video, we will go over the expectations that Wall Street currently has, my expectations for Tesla, what I think Tesla stock will do or can do after earnings, to the upside, the downside, both of these potential scenarios. There's one thing in particular I think is important that we need for a big upside move, and I will explain that as well throughout this video. I will also show you my position in Tesla and what I plan to do with that position heading into Tesla earnings. So we have a jam-packed video for you today, and let's get started with the actual expectations that Wall Street has. So the Zacks consensus estimate for the to-be reported quarter earnings and revenues is pegged at 62 cents per share and 25.1 billion respectively. The earnings estimates over the to-be reported quarter have been revised upward by 2 cents over the past 30 days. The bottom line projection, however, indicates a year-over-year decline of 32%. The Zacks consensus estimate for yearly revenues suggests a modest year-over-year increase of 0.8%. So we are expecting EPS is going to be down 32% and revenue is only going to be up about 1%. I think there's room for Tesla to beat these numbers by quite a large margin. I wouldn't be surprised if Tesla comes in with 75 cents of EPS or potentially even more. One of the big reasons for that is FSD. We've seen this FSD free trial in the last quarter, and I don't think Wall Street really has a good way to track that. It really hasn't done much for Tesla's estimates either, especially if people did go out and purchase FSD outright full price. That's going to add a lot to profitability because we expect that's 90+% net bottom line margins. Obviously, there's taxes and other things that go into that, but about 90% net margins should be really good for profitability. Again, judging off of the Google Trends data that I always show you, that a lot of Wall Street analysts do not look at, like this. I mean, you've seen the highest ever search trend activity for full self-driving by a long shot when we got this free trial. I suspect this helped profitability a lot, and it wasn't just one spike and done like you've seen many other times before. It was a spike and continued interest into FSD for all of last quarter, literally. I mean, you started off, what was this? March 16th, March 23rd, nothing. You literally started this last quarter with the free trial of FSD, and this momentum has continued all throughout the last quarter. So I think that's one big reason we likely get a large beat to EPS and to profitability. I also think the top line revenue could probably come in a little bit better than expected as well, just because Tesla tends to beat on top line revenue like almost every time. But unfortunately, these two numbers are not what is going to drive Tesla stock materially higher or lower. It's just not. What's going to drive Tesla stock higher or lower is margins, number one. But if we get new information, now what I mean by that is I think Wall Street really wants to see these new models, what they're going to look like, what the pricing is going to be, so analysts can start modeling those into their models for Tesla. Now, on Tesla's shareholder meeting, we got that slide of a couple of different Teslas that were covered up. Two of them look to be just cars, lower priced vehicles. One of them looked to be some kind of like van or larger SUV, something like a Yukon or a Tahoe, if you will. And that could even set Tesla up for a different demographic of auto buyer. And that could even increase Tesla's TAM, total addressable market. But these lower priced models will do just that. It will increase Tesla's total addressable market, better known as TAM. If we get these new models that are unveiled to us this earnings, which I think is a fair probability, that would give Tesla large upside from here. That was the thing everyone was waiting for just a couple of months ago, before FSD really became the main highlight and robotaxi. It was all about these new models. And I don't think that has changed from the perspective of impacting Tesla's business now. These new models that Tesla forecasted by the end of this year or 2025, which was sped up, in fact, are going to be a very big deal. And I mean, let's think about this logically. If we're going to get these new models by the end of this year or by the start of 2025, let's say Q1, Q2, right now would probably be a good time to unveil those models. Now, at the same time, I think to myself, does it make sense for Tesla to have a full event for these models to be unveiled? It could. It definitely could. But you already have the robotaxi event. And trying to jam another event in November or December doesn't make a whole lot of sense. It's not really Tesla's style. So I think there's a fair chance. I want to say like a 50-50 chance, maybe 60% chance that we get these new models unveiled. And that's where you get 10+% upside upon Tesla's earnings. But we'll talk about that a little bit later throughout this video. The Zacks consensus estimate for Tesla's second quarter revenues from automotive sales is pegged at $20.6 billion, implying an uptick from $20.4 billion recorded in the year-ago period. It says Tesla resorted to price cuts and incentives to spur vehicle sales. While that might have helped stimulate demand in the second quarter, it is also likely to cause margin compression. The consensus mark for gross profit from the automotive unit is $3.75 billion, implying a 23.4% decline from the second quarter of 2023. Now, I also think Wall Street is underappreciating this a little bit, but Tesla tends to reduce the COGS, their cost of goods sold, every single quarter. So assuming they were able to do that last quarter and the interest rate buy down was not that expensive per vehicle, then it may not cause such a big hit to margins as a lot of Wall Street is expecting. Now, auto gross margins last quarter were around 17%. Wall Street is expecting a number in the 15% range. So that's quite a big drop. And I think we could see some stable auto gross margins. If anything, I doubt you see auto gross margins actually go higher, although it's a possibility. While automotive profits are expected to contract on a yearly basis in the quarter to be reported, Tesla has been benefiting from increased energy generation and storage revenues thanks to the positive reception of Megapack and Powerwall products. I should also mention the margins on those products are a lot higher than the auto business, and considering the big beat we had to energy generation and storage, and the fact you've only seen EPS estimates go up 2 cents kind of just tells you, well, 2 cents in the last 30 days, kind of just tells you that you're probably going to get a large beat there, even from that metric of profitability for Tesla's overall business. It's probably going to be pretty dang impressive. Now, it goes on to say the consensus estimate for revenues from the energy generation storage segment is pegged at $2.32 billion, suggesting growth of 54.6% on a yearly basis. Gross profit from the segment is expected to be $598 million, suggesting growth of more than 100% from the second quarter of 2023. So Tesla's energy business is definitely going to be in the spotlight. The consensus mark for Tesla's revenues from the services and others unit is pegged at $2.43 billion, up from $2.15 billion recorded in the year-ago period. The company's supercharging network business is primarily expected to boost the segment's revenues, which FSD is probably going to be the biggest boost to that segment, and that's where you may even come in at over $3 billion for this services segment of Tesla's business, and that could also get Wall Street excited. Wall Street tends to like services, especially recurring revenue services, more than other, components of a business. So I think it's pretty clear looking at the numbers here, expectations, believe it or not, are not that high. You would think after a rally like we have seen in the last quarter, expectations would be through the roof for Tesla. And they're just not. And that leads me to believe potentially you're going to get an upside surprise across the board with Tesla's numbers. Now, again, I think Tesla's probably priced in good numbers. Okay, I think that's fair. The stock is priced in good numbers. So even if we get big beats on the numbers, I don't think it's going to be that impactful for Tesla. Up or down 2 or 3%, 4 or 5% wouldn't surprise me. But not an outsized move in either direction. I think we only get an outsized move on Tesla's earnings, which famous last words, I know, if we get these new models that are unveiled. If we get the new models that are unveiled, I would expect a run into the 300s over the next coming weeks, because that's going to change the calculus for Tesla's expected deliveries and expected growth, not just for next year specifically, but for 2026 as you start to be able to ramp up production of some of these models. So it really enhances the longer term perspectives of Tesla's growth story. And I think there's a better chance than not that we get that. But if we don't, then up or down 2-3%. Now, I will tell you, you've fallen from 271 down to 240. A lot of this has to do with what the broader markets are doing. Yes, I understand that. But it's always better to not be at an all-time high heading into earnings, because even if you get the best of the best, if your stock is at a 52-week high or is in a large recent rally, you're likely to get some downside after earnings from that standpoint. Like, one of my best strategies is buying puts on stocks heading into earnings at all-time highs. That's usually a winning bet. Now, closer to the money is usually better because they're at all-time highs. It's Wall Street's probably not wrong, but usually to get a 3 to 5% decline on a company that's recently went through a large rally or at all-time highs is not that uncommon. But if you get that reset, that fall before earnings, in which you've seen almost 12% decline now from 271 down to 240, you're much more likely to have an upside move coming on earnings. So I would be very careful betting on downside here for Tesla from that perspective. I don't think it's going to happen. I think most of this rally is the energy business, the fact that things are getting better. But, some portion of this is just looking ahead to the Robotaxi event. So really, to some degree, no matter what we get on these earnings, it's still all about the Robotaxi event. So from that standpoint, downside, yes, there's a correction going on. It looks like we could have a 5 to 13, 14, 15% correction, depending on what happens here over the next couple of weeks. That's obviously going to play a role to Tesla as well, and that's why I hope we get the new vehicles unveiled, because if we do, then that's going to help Tesla a lot, even if we do go through a correction. But really, on the downside, the only thing that matters is about $225 per share. You just want to stay above that level. As long as we stay above that level, things look really good for Tesla. From a longer term perspective, that is the long-term trend line for Tesla stock. Now, again, to the upside, if we get these new models unveiled, you're looking at 300 plus within the next month or two, in my personal opinion. And then the Robotaxi event's really what sends this thing home, likely to all-time highs by the end of this year. That's still my prediction. But if we don't get the new models unveiled, if we just get beats to, earnings, revenue, margins, all of that, I would expect Tesla somewhere in the neighborhood of 255 and 270. Really not doing a whole lot of anything new. Now, as far as Tesla stock and my position, current market value, $20,715 in this portfolio. This is the portfolio I've recently added to. And the total return was up to like 7,000 at one point. Now it's back down to $3,983. Average cost $194.01. And yes, if we do get any kind of meaningful pullback after earnings, I will be buying more. Currently I have 86 and a quarter shares in this portfolio diversity of 35.65%. Mainly this buying power has been going up now to $13,500 because of a lot of winning trades recently, and that's lowered the overall portfolio diversity in Tesla. But at one point it was like 45-50% or so of this entire portfolio was in Tesla. Now it's lower because of some of those winning trades and more cash that is in the portfolio. But I do look to put this to work in Tesla if and when we do get a larger pullback. Now, do we go back to the 190s? Maybe not. It really depends on the economy and what's going on that front. The economy is kryptonite for Tesla. If we get the economy that weakens too much, Tesla's going to start being impacted a lot by that. If the economy stays fine, then Tesla won't be. Now, these are the most asked questions on Tesla earnings. These are the questions that we are going to hopefully get answers to. Let's just read the top three, because that's usually what Tesla does, is the top three. Number one is, when exactly is the robotaxi event? If not, August 8th of this year. So I'm sure we get new answers to that. Number two is, when do you expect the first robotaxi ride? This is massively important. That is basically guidance for the robotaxi event. If they answer this with an actual date or year, that is going to be massive for Tesla stock. Massive, massive for Tesla. And then number three is, what is the updated timeline for Giga Mexico, and what will be the primary vehicles produced initially? That's something that's also important. We have not heard much out of Giga Mexico, and with these new vehicles being produced, now thinking about the robotaxi, I mean, there's a lot of room at Giga Texas, but you need another factory to start cranking out some of these production lines if we are still targeting these new models by the end of this year or the start of 2025. But again, as far as my plans for this position in Tesla, heading into Tesla earnings, I don't plan on buying any puts. I don't. I will look at the calls. Calls have been very expensive recently, obviously, so it will depend the day or two heading into Tesla earnings whether I do make a call position. And one of my biggest strategies recently has been, I'm going in with 3 to 5 contracts, sometimes 2, depending on how expensive they are. I'm looking to get 20-25% on the position, calls or puts, and I'm selling 4 of them and keeping 1 for free. I'm selling 2 of them, keeping 1 for free, and just riding profits into earnings to try to get that larger gain following that. That's been a pretty good strategy. Probably something I will employ with Tesla. Tesla's very volatile and things happen a lot. So that's not financial advice. You could lose all of your money if you trade options. Obviously, if you guys want to come trade with us, check out that link down below in the description of this video. I do send out alerts every time I make trades. But really, long story short, with Tesla, I'm not concerned at all about Tesla. I sleep like a baby most nights. Not last night. It was hard to sleep last night. But I lose 0 seconds of sleep from Tesla, even if I had my whole position in Tesla. It's such a confident long-term bet. I don't feel the need to hedge. If we do go through a recession, great, I'll buy more. If we do see things go utterly wrong at Tesla, good, I'll buy more. As long as Elon is the CEO, and as long as they continue to pursue robotaxis, autonomous vehicles, it's only a matter of time before that happens. And I'm not going to be the jackass, if you will, that knew this was going to happen and didn't invest in it. 20 years from now, you and I would be kicking ourselves if we were not as invested in Tesla as possibly as much as possible today. So that's kind of my perspective. This earnings will be very important. The only thing, again, that I really care about is we stay above that longer term trend line at about 225. That's it. So I think that's going to happen. But again, it just depends what happens with this correction in the markets and Tesla earnings. So these are kind of my expectations. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel if you made it to the end of this video. You guys have a fantastic weekend, and I will see you in the next one.